What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. My cat is sitting right next to me. He might make a cameo. Today we're going to talk about the price action in the indices. We're going to go through the quarter end madness. Before we do that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters, and do not YOLO your entire account into any one of my trades or anyone's trades for that matter. All right, everyone, let's take a look at these headline indices. We've been talking about the potential for a pullback for the past week or so. And today, sure enough, quarter end, the window dressing of the quarter officially ended. We had like $300 billion that was coming into equities over the last 2 weeks. And it looks like that finally came to an end. For box scores, we have the S&P 500 finishing down 1.54%. We have the NASDAQ QQQ finishing down 1.24%. IWM small caps finishing down 1.06%, Dow Jones down 1.5%, and the ARC Innovation ETF down 3.48%. You can see pretty much everything closed at the very low end of the daily range. Volatility increased in everything. Pretty noteworthy, there was barely a volatility pickup in the small caps, and we had negative breadth across the board throughout the first half of the session. Really until the end of the day, the breadth wasn't so bad. You know, it was maybe like 50% advancers, 50% decliners. But then into the close, there was a huge market on close sell order. It was for $10.2 billion, which is the highest I've ever seen for the market on close. My trend model flipped from a +1 to a -1. So that is definitely noteworthy. And I want to make sure that when my trend model is negative, want to make sure that I am sticking with my trend model and not taking on too much risk. One of the things that I've done in the past that I want to make sure that I avoid is trying to front run the trend model, trying to get one step ahead of what the market's going to do. I want to make sure that the market's pretty much my dance partner here. I want to make sure that I am in sync with my dance partner. I do not want to be stepping on the shoes of my dance partner. All right, Finviz Heat Map. Take a look. Today was a bit of a bloodbath. Throughout most of the day, Apple and Tesla were just stubbornly bid. They really were not selling off. But then, of course, into the end of the day, pretty much everything just gave way. And we had a massive wave of selling. So you can see Tesla was down 1.5%. Still not that bad given the crazy increase over the past 2 weeks. Apple down 1.78%. Google down 2%. Microsoft down 1.77%. So it's like deja vu all over again. Where, remember, just 2 weeks ago, we were coming off of an insane sell-off where it seemed like the market was never going to go up again. Then we had a 2-week rally where it just seemed like the market would never go down. So it really just shows the anchoring bias and the recency bias is definitely a real thing. As humans, we all experience it. Sectors, take a look here. We had every sector. Wow. So this is pretty key here. This should be like your one takeaway from the video. So apparently there's going to be legislation that's, I believe, moving to the House of Representatives on potential cannabis legalization. And yeah, sure enough, the MSOS cannabis ETF was the one group that actually finished out positive on the day. So I'm definitely going to be watching that group. We'll pull up the chart in a moment. Take a look at this, though. You can see we had weakness across the board. The ARC Next Gen Internet was down 3.7%. ARC FinTech was down 4.31%. KWeb Chinese internet names are down 6.25. Now keep in mind, this is speculation, it is conjecture, but I was seeing earlier today, I have my news wire that continues to just ping me, and I get the news throughout the day. And what I noticed was there were so many headlines about Russia and Ukraine, and it was just like the same thing. Basically, what I call them like negative noises, where it's like I try not to dig into like the minutia because I know I'm not a geopolitical analyst. But yeah, it seemed like the general tonality was negative around Russia and Ukraine. And I will say the market had priced in like the best case scenario for that conflict, where it's like, all right, conflict is over, market just rallies all the way up to the top. So yeah, interesting that we started to hear some negative noises there. And then KWeb is just having a vicious sell-off once again. I noticed the last time KWeb had a vicious sell-off was right when Russia invaded Ukraine, and I think there was some fear about US and China decoupling. So it makes me wonder, are some of those fears resurfacing because now KWeb is kind of weak. Areas that were a little bit stronger, of course, we already mentioned MSOS. Utilities were barely down. What else was barely down? Yeah, that was really it. So yeah, very risk off in terms of our sectors. Let's actually take a look at some of those charts before we forget. Sometimes I see I'm gonna look and then it just slips out of my mind. MSOS, so this horrible trend, but I do understand these cannabis companies fundamentally, and this, in my opinion, this is the most undervalued sector of the market for how much cash these cannabis companies generate. Their fundamentals are pretty fantastic. They're growing companies, but because they are not listed on the popular exchanges, they're 5 ticker symbols, means they're in the over-the-counter market. A lot of these funds, they simply cannot invest in these stocks. So their liquidity is bad, and throughout this entire bear market we've had in low liquidity names for the past year or so, like, it's just not been good for the cannabis names. But hey, if there's some good legislation, maybe we start to see a little bit of a change here. So what I'm going to do, I'm going to go ahead and set an alert for myself. And this is going to be our new value area starting tomorrow. I'm going to set an alert right here just in case we break above value for MSOS. And this is good because I am not fully invested. I'm in 80% cash, as we've been talking about over the past couple weeks. So I actually have cash to put to work. So yeah, we'll see what happens there. Let's also take a look at KWeb that we also just mentioned. KWeb was down 6.25%. Yeah, really just moving towards the bottom end of the range. So nothing actually all that crazy. Let's move over to our indices. So S&P 500. Now remember, we've been talking for the past week or so about how, hey, the market is very overextended from this 20-day simple moving average. It doesn't really make all that much sense for me to be getting like super aggressive on exposure up at these levels. And one thing I believe as traders we all have to sort of realize, come to peace with, is we don't know what the market's going to do next. All we can do is analyze the risk and reward of a particular setup. And if the risk reward's good, hey, go for it. If the risk reward is not so good, don't go for it. So yeah, that's what I've been doing. That's why I've been mostly in cash, because I know, hey, this 20-day moving average, we're going to meet it no matter what. It's either going to be, hey, the market's super strong, you know, there is no pullback, the market just consolidates sideways. 20-day moving average will come up to meet it. If that's the case and all is going well, hey, I'll go ahead, get more exposed. My trend model flips positive. Perfect. What I think could end up happening, though, is, you know, we get a pullback to that 20-day moving average. And either way, I want to make sure I'm not like firing all my shots when we're this extended. So yeah, take a look in the after hours. We are up 0.18%. And look at this, our new monthly value area is lit up because we're technically on, you know, the next day's trading session for these ES futures. So our new monthly value area high is 4428.25. Definitely get acquainted with these levels. Our point of control is 4264.75. And our value area low is 4149. Take a look at the hourly chart here. This right here is our weekly value area. And you can see we're getting awfully close to that top of the weekly value area at around 4505.75. I'm definitely going to be looking tomorrow for a retest of that level. And then, hey, let's see, maybe there's demand at that level. Maybe we just bounce right off. Maybe that's a great level for a day trade on the first touch. So yeah, we actually have like some actionable levels now to work off of. It's not just like, well, the market's rallied for 10 days in a row. It's probably going to go for the 11th. Let's buy. Now I want to make sure that I'm not doing that. NASDAQ. The NASDAQ has failed at the 200-day simple moving average. So yeah, it's not really the best picture. We're above this monthly value area, but again, we're extended from the 20-day, and so far we're seeing, you know, failure in the NASDAQ. Russell 2000. So this was the big time failure, and we mentioned this yesterday in our video. So the Russell 2000, we had this nice breakout here. Oh my gosh, awesome. And then yesterday we pretty much just like gave the majority of it back, and now today we've just fully erased that breakout. So a lot of times the way this works is from false moves come fast moves. So the small caps, they're not looking great. Is this confidence inspiring? No, not really. And we're inside of value for the month of April. And then the Dow Jones, take a look here. The Dow Jones also failing at the 200-day moving average. I don't really think we need to say much more here about the dogs of the Dow. So overall, this is a pretty ambiguous picture. It's pretty nuts because just a few days ago, it was like, everyone's bullish. Oh my gosh, the market's never going to go down again. But yeah, very ambiguous, and my trend model's at a -1. All right, let's take a brief look. We'll check out the style factors. And again, we're going to see the same thing. Worst performing style factor, international momentum. We had growth down big. We had value down big. Just, weakness across the board. The best performing style factors were min vol and high div, low vol. Put hate is back. We talked about this yesterday, how everyone's loading up on these YOLO call options now. And pretty much everyone that did, they just hit, a complete wall over the past 2 days. So yeah, these sentiment indicators, they really matter at extremes. It's definitely important to see the big picture and just understand, like, you don't have to place a trade every day. Like, it's very easy for me to say that, but for most traders, they literally can't do it. For most traders, there's some sort of like addictive component to trading where they want to be hitting those buttons. Today, I didn't have any trades because there just wasn't much for me to do. I'm currently sitting, I have my SPY puts on, I have some UVXY, and I'm long treasuries via the TLT ETF. Seasonality. So here's the caveat. April does tend to be a very strong month for equities. So we do have, the Fed's QE program just ended. We've got yield curves inverting. We have geopolitical conflict. But hey, I want to keep myself open-minded to all possibilities. This really is like the fly in the bearish ointment. All right, let's take a quick look. There are some names I did my scanning for tonight. Let's take a look at some of these charts. Let's get some chart action going on. So one that is looking pretty good, we have KBR. Take a look at this one, pretty much unfazed by today's sell-off. And we're having a tight consolidation. This stock, we're not extended away from that 20-day moving average. This one looking pretty good. Don't mind me over here. Look away from your screen. No, kidding. I just set an alert there at 55.17 just in case. LAC, this was a name that we brought up yesterday. I also brought it up for Pristine Capital members in our pre-market webinar. And LAC, like, I'm still noticing a lot of these commodity names are very strong. This one had a really good finish. Didn't close quite on the highs, but you can see some high volume coming in here. Definitely one to just keep on the screens. MDRX, this is another one that looks pretty juicy right here. Looked like this one wanted to move to higher levels, but the overall just weight of the market really kept this one down. And then Tech, which I believe we mentioned yesterday, is looking pretty good as well, consolidating towards these highs. Another thing I want to bring up before we wrap up, I'm going to skip options today because I don't really think there's much to talk about there. We are introducing the Pristine Capital long-term investing portfolio. I'm going to be putting out a full video about that for all Pristine Capital members. And this thing, it's really designed to compete against the Vanguard target retirement date products. So Vanguard is my alma mater. I worked there on the fixed income trading desk before I started working for myself and founded Pristine Capital. So yeah, I was like, what, for a lot of these active traders, we're so used to like trading every day and speculating and whatever. And I wanted to create something that's just a very good solution that someone can dollar cost average into and just do that for the next 10, 20, 30, 40 years. So yeah, more to come on that. And we are launching that. I posted it in our Discord. So yeah, more to come on that, more information on the way. All right, that about does it for this market recap video. Hope you all had an awesome trading session today. And I will see you all tomorrow. We have our first day of the brand new month. Let's make it count.